What's going on, penny boys and gals? What's going on, stock traders? And welcome to our market review stream. We do this every Friday, 3:15 Eastern PM, and we have a lot of stuff to talk about today. We have Apple we're going to be talking about. I know they had their buy now, pay later, and VR and AR ventures. We'll be talking about if that makes them a buy. I know, Pookie, you were trading them earlier. Boeing had some insider trading going on. Amazon and AMC. Is Amazon buying AMC? And then, of course, we'll be talking about Disney and some ETFs that we're looking at under Roundhill Investments. There's a big banks ETF, as well as a Metaverse and a sports betting ETF we'll be talking about. But Pookies, let's get right into it. Do you want to start with Apple, maybe? I know that you said you did like a full breakdown of Apple during your stream earlier, right?
Yeah, we hit Apple. So I'll change my chart around. I thought we were going to go over the other ones first. That's okay. Let me just change these, and I'll put the top one on the 1 hour because we got to look at the higher time frames on Apple. So Apple is one that has been on our weekly watch list for quite a while. We've been trading the heck out of it, and it's important to look at the types of zone that we have here on Apple. So if we look historically here at Apple, there's a lot of unresolved levels in this area between this line here at 170.54 all the way down to about 157, where the price just tends to shoot from one to the other. I made the analogy of it being a roller coaster. It goes from the top of the roller coaster down to the bottom of the roller coaster, back to the top of the roller coaster. It's not really stopping halfway up and then falling back down here. So there isn't a lot of decision-making history in this area. As opposed to these higher levels and lower levels, there's definitely some clear lines of contention. So right now we just kind of peaked over this 162.60 level, and it just kind of blasted, which is pretty good. It's on good solid green volume. I'm personally expecting a little bit of a pullback, but if we want to see higher bullish volume, I would really like to see it retest this level from above, because if we look at this level, it's only really ever been tested from below as a resistance level. It hasn't been given a chance to perform as a support level yet. So I think for more continuation to the upside, for a safer trade, I would like to see it come back, test this level, hold, and then push up from there, rather than just trying to chase into it right now. Because like I said, we've been trading this thing for a couple of weeks on and off. You could say I got boxes down here where we've been trading it to the upside and the downside and the upside again. Plenty of opportunity on this one. And this is an example of a stock where you can just learn a handful of stocks and be pretty consistent, because this one is very well structured.
Interesting. And Apple, I know long-term Apple is looked upon as has a reputation for growth, long-term growth, up around with growth around 279% in the last 5 years, 897% in the last decade, largest market cap in the world with 2.5 trillion. Right now, they're looked upon as the most valuable brand in the world, according to Omnicom Group. They're valued at $482.2 billion. Microsoft is number 2 with $278 billion, which is a pretty big. That's a lot of billions underneath. And then, of course, Amazon at third with $274 billion. What do you think about Apple? Forget about the charts. For the short term, as far as the long term, and people who are looking to invest and hold 5-10 years. Do you like Apple still as a long term growth stock?
I disagree with that, honestly. No, I like their. Okay, so their business model is a double-edged sword, right? They know that they control their manufacturing, their distribution. They have a very tight pipeline, so that does reduce the amount of debt that they could potentially take on. They reduce their established lines of credit, their dependence on other companies, other manufacturers. So that has set them up in a position to be very efficient with their money. But I disagree with the way they approach their product line. They're just not as efficient in that area. And I think that once the brand zealousness kind of wears off in America, especially as this economy continues to struggle, I think they're going to feel it probably sooner than Microsoft and sooner than Amazon. They're just too specific, I think, for my taste personally as an investor.
Yeah. Well, as far as the brand goes, it's, they are marketing geniuses. I definitely know that. They've taken over the smartphone industry. 24.1% is their market share in smartphones, and number 1 in smartphones. They took over the headsets with their AirPods or whatever it is. I don't have them, so I have like the $10 knockoff version you get on Amazon. But that's all you need, right?
Unless we have any audio files in here, I'm sorry, but
right. Do you think that this? And I don't know if you've even tried it yet. Have you tried the Apple the buy now pay later feature they have that they came out with on their Apple iPhone wallet?
No,
it's like a loan system basically. You can get a zero interest loan ranging from $50 to $100, allowing customers to pay for goods and services before payment. They can do their payments in, like, I think it's 4 payments over 6 weeks. It's basically loans via Apple financing, and they're partnering with Goldman Sachs for this. Is this something that you're bullish on? Would you use this yourself? Or, do you think this is the next big thing for Apple?
Again, it's a double-edged sword. So if they can make good use of this and implement it in other services that aren't just selling devices and subscriptions to people, I think they'll have a tremendous advantage over the market. But if they're just giving people loans to take out, to buy phones and to buy apps and stuff, I don't see that as being very productive from a business standpoint. It's a good avenue for them to expose themselves to the lower end customer base, which is great. But again, this economy, I don't think we're going to see a lot of people trying to take out extra payments on stuff. I mean, it's very difficult to justify those kinds of expenses. And for cell phones, there's a lot of cheaper, more stable alternatives. A lot of people are just switching over to Android. I'm not trying to name drop or anything here, but I personally made the switch. I get it. I see both sides of it. I still like both products. It's a business decision. And if they can't capitalize on that and use it for other things, I think they might have maybe shot themselves in the foot a little bit.
Well, you're talking about products. I know that you personally you use the MetaQuest, right?
I do.
How much does one have to, like, if one's to get how much does that cost around to just get the actual MetaQuest?
I think I paid $3 or $350 or something, but I got a bundle and stuff.
You hear how much, I guess Apple is launching a VR and AR headset. It's going for, it's going to be in June, going for around $3,000.
Yeah,
which is, I don't know why anyone would want to pay. I mean, what is it? Does it take you unless I can eat like a meal there too? And I just don't understand how you could, for $3,000, how much better it could be than the Oculus,
Well, so to be fair, electronics nowadays have an incredibly fast depreciation. So it might be $3,000 now. So was the original PCs that came out. Those were $5,000 back in the early 80s and 90s.
But they already have headsets out for $300. You just said with MetaQuest, right?
Yeah. So that is kind of the most commonly sold one. There are pro versions that are $1,300, I think it is.
Oh, okay.
Each one has different capabilities. Like the one I have has, I think it's just a black and white IR set of cameras built in, so you can augment reality. You can look through it, but it's very low detail. I can look at my cat and he'll be all pixelated and stuff. Now the higher end ones, I'm sure they have a lot more capability technologically. I just don't need it for what I do, but I have seen some really cool apps with augmented reality, and there's definitely a bright future in that. And I don't think they have to be very careful about how they do it, just because it's a kind of a new frontier. It's so expensive because the consumers are paying for that tight pipeline and the controlled manufacturing and stuff. That's their kryptonite as well as their super strength. So
yeah, I mean, you're right though. This industry is definitely, I mean, according to to the analytics and to all to the analysts, they're saying it's looking like we might be seeing the VR and AR industry growing at a compound annual rate of 13.72% through 2027. So this could be good news for Apple if, like you said, they can get that price point a little bit better. And if it is that much better than the MetaQuest. But well, I guess we'll see. When it comes to that, I know that Disney is doing the opposite. They're getting out of the the whole AR VR game with their layoffs. They just recently ditched their Metaverse plans. In their first rounds of layoffs, they plan to dismiss 4% of their employees. And some of these layoffs, actually, one of them was the head of production and post-production at Hulu. And they also said they're going to start not only laying off, but also just producing less content on Disney Plus, their other streaming service. Of course, Hulu is also owned by Disney. What do you think about this? Is this something I know that Cramer said he's bullish on Disney. So what do you currently think about Disney?
I actually still like Disney, but they have an advantage that Apple and Meta don't, and that's that they are involved in many services. So they make very good business decisions sometimes, not always, obviously. But like taking over Lucasfilms and taking over franchises, that's been their real super strength as far as their content production. But I think they see the writing on the wall. I think they know where they're not wanted, and a lot of their competitors they're just being very aggressive. I don't think they can really keep up, and they know it. So they're probably going to minimize their expenses and their branches. They're going to prune some branches off their tree and just really focus on where they're stable. And I think that'll help them long term. Now, do we see a good reaction to that in the market? Of course, there's always an opportunity to play both sides, but I think there will be some contention over it. If we look at Disney, obviously today we had a pretty good little run on it. And now that Cramer has spoken, it is what it is. So it's broken out above where we want it to. We got a nice little trade on it today. It's smacking into this target right here. We locked in 75% nice and early. The majority of the first target is right here. I could easily see it pumping over 100. I just think long term, I would probably wait and see where they end up, if that makes sense. So I'm focused short term on Disney, not long term.
Yeah. Bull, anything from you? I'm going to pop your screen on the chart when it comes to Apple, Disney, or anything. Oh, there goes Bull.
I'm here.
Oh, there you are. Oh, he has a phone call. All right, so we'll go to the next topic there, unless there you go. What's going on, Bull?
Okay, so I was looking at Apple, and we've been on quite a bull run lately. I mean, shoot, this thing was trading at $123, $124 back in January. Early January, sitting up here about almost 165 now. Almost $40 move on Apple in the past 3 months, past 90 days.
Oh yeah.
I think there's going to be a pullback coming soon. I really do. I'm kind of eyeing this 175 level as probably the next important resistance that Apple probably needs to deal with. So we go ahead and mark a horizontal line right around 175. Make it red for resistance since we're uptrending. A couple things I've been looking for as far as opportunities is I've been kind of scouring around the option chains at different expiration dates. I'm real interested in the 175 call, not to buy it. I want to sell it, which would be a bearish position there. We already know 175 is going to be a resistance that Apple needs to contend with. And I do anticipate some sort of, I'm not saying, we're going to go back to a bear market and everything's going bearish, but with the run that Apple has had in the past 3 months, I do feel a pullback coming. So lots of volume on this 175 call here. What I'd probably do is sell the 175 and then I'll buy the 177.50, creates a $2.50 spread. Probably just do call credit spread on that. It's paying about $36 for every one that we sell. And it's about almost 15% on your money. So I'm going to be looking to open up this call credit spread position on Apple in the very near future. I'm not going to open it up today. I want to see what happens on Monday to see if this rally continues, but the first sign of weakness, I'll probably go ahead and open it up. And then we can capitalize on the downside for a quick call credit spread trade. So that's what I'm looking at for Apple.
As the doctors say, Pookies, do you concur?
Absolutely, yeah. That as he said, it's overextended. We've had nothing but mostly just strong uptrend. You can see, these are a lot of big green candles. There really hasn't been a strong pullback. So if I draw a fib right here to there, we haven't dipped below 38.2%. on really any of these impulses. So It needs to cool down. There's got to be some resolution down here. People need to take profits, and then we'll see if people jump in and continue it to the upside, which I'm sure they will. It's a nice discount. Right now, the sentiment is that this was all already a good discount. So it's got to come back here. And these people have to stop hodling. You don't want to chase it in a bright green day just to sell the put. Like you said, you want to just wait and see when that weakness steps in. And that's going to be your opportunity.
I'm glad you brought up hodling, because the next topic we're going to be talking about, there are a lot of people who did just that during the big run of AMC, the big GameStop AMC push. A lot of hodlers there. Amazon, and actually, no, AMC is back in the news because of Amazon. Looks like Amazon is possibly thinking about buying AMC. I know they bought. What was it? The other company was MGM they bought for, I think it was like $8.5 billion last year, so they could add like the James Bond and Rocky franchises to Amazon Prime. And so now the thing about AMC theaters, I personally, a lot of people are saying that they don't think it's going to actually happen. One expert says that we do not think AMC is a likely acquisition target in general, given its massive debt and inflated valuation. Do you agree with that statement, or do you see the big AMZN going to be on the signs of every AMC theater going forward in like 2024?
Elon might kick the tires.
Yeah, maybe. No, I was just, AMC does have a lot of debt. I think if Amazon is serious about acquiring them, they're going to pay pennies on the dollar for the company. Trust me. Amazon will be the winner on that one. Maybe they try and rebrand and refocus to get more people to sign up for Amazon Prime. You know, the previews before the movies will probably be more geared towards, you know, signing up for Amazon Prime, and it could be a funnel to get people into their Prime subscription. You know, all the people that go to the movies and stuff, and of course, then they can premiere their Prime movies, you know, in the theaters. You know, so there is, I think, some upside for Amazon, but I think if they are serious about acquiring AMC, they're the ones with all the money, and they're probably going to pay pennies on the dollar. I don't think it'll be good for AMC, to be honest with you.
No. So you think it's bad for AMC, but good for Amazon then, as far as like a stock price goes, or just in general? Like
I mean, of course. You know, just I think you know, Amazon will probably go in there and rebrand everything, you know, geared towards them. So, you know, we'll see what happens. But like I said, the main point is, I think if Amazon does acquire them or is serious about acquiring them, they're going to get quite a deal. I think, you know, like I said, they're going to pay pennies on the dollar, I think. So we'll see what happens.
So, I mean, once it failed that wedge back in December 2021, I mean, we knew it was going to come down to like $8, somewhere around here. And if we could identify that, certainly Amazon execs with all their salaries and certifications had that same valuation point, right? Because this is what they do for a living, a lot more intensively than what we do. So, yeah, there's no reason they would have bought it anywhere above like the $8 level. There's no reason to even look at it at that point. And it's become more predominant that larger companies consume smaller companies like this. It's not that it happens more. It's just it's receiving more attention because of things like Elon buying Twitter, this news, Amazon potentially buying AMC. There's always going to be that drum up and speculation. And it makes sense that they would consider buying it, even if they're not invested in doing that right now. It's definitely on their radar, no matter what. And you got to remember, when things like this happen, they're not buying just the company or the service; they're buying the audience, and that's really where the value is. Sure. Yeah, they're buying the customer base.
So when you say that, do you see all those AMC ape investors moving over, like in buying Amazon in solidarity? Do you think that could help Amazon? I know Amazon has a humongous market share, comparatively. Like like a few degens isn't going to move Amazon's price.
No, but the retail never had that kind of influence.
Right,
they never did. If you do the math, the retail never controlled the price on AMC. I don't care what anyone says. I will walk them through the math myself. It's just not physically possible. It's always been the algos, the high frequency traders. They're the ones in control. They tell you where the tops are and where the bottoms are. We just go along for the ride for our part. Now, they could certainly try to rally, and that would encourage the algos to open it up a little bit and let them kind of get that confidence going so they could take more of their money. But I'm not very confident that would go anywhere long term. So there's really no reason to look at that anything other than maybe a momentum trade.
So I know we talked about AMC. Yeah, right. Day trade for sure for that one. But I know, we're just talking about AMC as far as the chart goes. What do you see as far as Amazon goes? I know you're playing that one earlier. I know they're, this Amazon, Google, Microsoft are the big three. Right now, Google and Microsoft are kind of battling it out over their cloud computing services. Google's cloud VP is like accusing Microsoft of unfair practices. So, that's great for Amazon. You're like, let them two battle, and we'll just go ahead and buy AMC in the meantime. What do you think of Amazon long term, or just in general as a trade?
I actually like it, and we're if we can clear over this level here, I've got a couple levels drawn out here. This is actually on our watch list that we've been trading quite a bit as well. Amazon is well below its valuation, in my opinion. So this is a good opportunity area for pretty much any long-term investment in Amazon. Now, we've got a couple technical elements to support that. Like, you've got this gap here. It wasn't resolved here. It just blew right past it and then blew right past it again for this little abandoned candle here. This is another beautiful momentum gap that could easily just run and then exceed that and continue pushing if we can run into that with some volume. Obviously, the short-term trades are going to be these day trades like we did this morning on the live stream, because that's how we can just lock in those quicker, more frequent profits and compound them. But it's always a good idea in these cases, if you are a longer-term investor, to build in small, be careful, make sure you get your money's worth, and just chip away at your profits, chip away at your position until you're in a really, really good spot, and then just let it do what it's going to do. I personally think Amazon has a tremendous amount of potential. The valuation levels easily 150 or above, in my opinion, based on research and stuff like that, not just the chart. They're less efficient than they should be, but they belong at least up to 150, if nothing else, the 120 range or higher. So I don't see any reason why anything below that shouldn't be a pretty good discount.
I see, Bull, you've plotting out some fib levels as well as far as Amazon goes. What's your tech analysis on this one?
Yeah, I love Amazon long term. I really do. I would just be careful buying at the top of these runs because we're going to get some pullbacks. I like it better in the 90s. We'll see if we get that in the future. Specifically, 94 to 95 bucks, I think would be a good bargain there. And kind of lines up with the previous resistance from early in March right here. Kind of right in between the 50 and the 61.8% fib levels there. So that would kind of be my value zone to try and pick it up. We could probably just go ahead and draw this out like this. Maybe make it green because we want it to kind of fall into there. And then I would be interested in going long then. Or we'll just see how strong maybe the next pullback is going to be, and maybe we scoop it up around 100, and as long as it holds $100, we could always keep a stop loss below there if you're going to swing it. Long-term holding, we don't really care that much about stop loss, especially if you're going to kind of trickle into the position over the next year or something like that. But for the time being, I do like it better in the mid 90s. I would definitely go long there. So basically the point is just be careful buying into it when we've had three, I know this candle back here is red, but overall, 3-4 days in a row green. There's going to be some exhaustion at some point. And if it's something you want to add to your retirement account, don't go all in on your first buy. Maybe trickle into it over the next several months or year, and try and get it on the pullbacks.
Yeah, I agree. There's really no reason to ever buy anything at a resistance level. That's the riskiest possible place. For this one, it needs to break over, like at least over 103, 105. If it fails 101, then we're probably going to come back down and see the mid 90s. Easy.
I like it.
Perfect. Yeah. All right, let's move on to our next stock that you were playing. And by the way, these are all stocks that Pookie's Revenge was playing during his live trading stream. When is that on? I know it's every Friday. What time is that for Pookie?
Market open. We just jump into it.
9:30 a.m. Eastern.
There we go. And I know one of the stocks you were playing was Boeing. Apparently, over the last year, insiders have been just amassing shares of Boeing. I believe the president had one single transaction of $4 million worth of shares at $160 per share. I believe it's currently trading in around the $200 range. Yep. We can pull it up. Actually, there it is. Yeah, 211. So that's a pretty good profit so far. That being said, the one thing is, no one's actually done any insider buying in the past. I think it's like 3 months or so. However, they haven't done any selling either. So I'm curious, Pookies, what does that show you? And you see a bunch of insiders, amassing shares, but no one's selling the shares. But it was just that one big buy around 3 to 6 months ago. Nothing really since. And I know they have those, like there was like 737 MAX 7 models coming out. It's all about producing more planes for them. Does that kind of make you think that the president's amassing those shares, that maybe he thinks that that was the bottom of that, that next 6 months a year area?
Yeah, so you got to figure these guys aren't trading the same way that we're trading. They're actually investing, which means they're going to look at things like dividends, valuation, long-term positions. They're going to look to offset their losses. They have a lot more insight into the inner workings of the company because they do more research. And their portfolios are much more diversified than ours. So if we're looking at short-term, long-term trades, we're speculating. If we're looking to build equity over time, that's investing. So that's when you're going to want to get into the internals of the filings and stuff. Now, I believe that is on a much longer time frame where you'd make a buy like that. That would be an average up in that case. I'm not sure what his previous buys were. Then you're talking about the president of the company.
You there? Just was Pookie?
No, I'm still here. Were you referring to the president of the company?
Oh, sorry. Belicia. Sorry, I was just looking up. Sorry, I was looking up some of this other thing right here about the other stock that you were just playing, FedEx. But I was talking to the president of the company though.
Okay, yeah. I mean, there's any number of reasons why a president might buy their own shares. I mean, it could also just be to shore up investor confidence and things like that. It could be to get himself a hefty little write-off if it does go poorly. There's all kinds of advantages a president has when it comes to buying companies, his own company shares. As long as he discloses it and plays fairly and stuff like that, I usually view that as a good sign, especially if there is an upcoming catalyst that we don't know about. The board directors, they always know more than we do before it happens. So insider buying is typically viewed as positive. Yeah, that's one of the best indicators. We just like to wait for some confirmation.
All right, I just pulled a Bull's screen on the screen as well. So now your screen sharing, Bull. What are you looking at there?
Looking at the top chart here on my screen, got Boeing pulled up, and it's sitting at a real interesting level right now. Basically, it's been using right around 195 as support recently. And, I really think it needs to get past 215. Okay. And that's kind of is right under there now. I think 215 is a level that kind of acted as resistance over the past couple months here. Just couldn't quite, it got above 215 a couple times, just couldn't sustain, dropped back below it, bounced off the 195, kind of used that as a bottom over the past about a month now. And now we're back up to this right below 215. I think if Boeing, if buyers buying pressure increases, from here, and we can get above that 215, I do think the next target would be 230. Price target number 2, probably around 243. So those are the levels to the upside I have on Boeing. Just keep your eye on it. If it does pull back in the next week or so, let's just make sure, if you're going to be in the position long, we really want 195 to hold. You could probably put a stop loss right below that if you're just, doing a short time swing trade on it or something like that. But if we can get past 215, I think 230 and then 243 would be next. So we got some good upside there. And it's kind of trading sideways, just kind of waiting for a breakout either above 215 or below 195. That's basically what we're waiting for right now. It's okay to be patient on these things, you guys. Just because I like Boeing doesn't mean I need to jump into the position right now. Because as you can see, if you jumped in right now, it could easily get rejected from this 215, just like it did several times back here. And then you'd be red on the position in the next week or two, because it'll maybe a good chance it could retrace back into the mid 190s. So for me, I'm just going to be patient and wait on a break one way or the other. If we do break below 195, could be a great short opportunity, possibly down to 185 and then 175, kind of lining up in $10 increments there. So we got possible short play if it can't hold 195 in the next week or two, if assuming it gets rejected, here around 215. If it does break to the upside of 215 and we can at least get a couple green days above it, which will signify that the buyers are kind of propping it up above there, maybe waiting for a next leg up. I think this could be an easy long play either through options or shares to 230, then 243 after that.
Absolutely. And for the shorter term, that's what I have.
Yeah.
This is day trades. We have these on our weekly watch list as well. So if you missed it, we put out a watch list every Sunday, so you guys can kind of base your own trades on that. Now for day trades, we can use the weekly watch list to identify the local trades and the shorter trades. So this one actually missed it this morning. I wasn't able to catch an entry because I had it all plotted out the night before, and then by the time the market opened, I was setting up my stream and stuff, so I wasn't able to focus on that one. I just had the 4 charts up here, and that one was just already going by the time 9:30 hit. So we already saw the confirmation, and we know that it's never safe to chase. So the idea was to just watch it happen, and there's still plenty of time to watch it run up, hit the target, get rejected, and fall back down. But really what I'm watching for locally is going to be this range right here from 211.55 to about 210.32. If it fails below 210.32 and we see a confirmation down here, that's the short opportunity. For shorter term trades, if it pulls off this level here and holds as a support, maybe tomorrow into Wednesday, then we'll get another long opportunity to come up to these potential targets. Ideally, I would like to see some more continuation of this giant green impulse, and then we just blast over 215. But we can't predict that. So if it happens, that's great. Then we'll take another entry and we'll do it the right way. Otherwise, we just watch, just wait and see what happens. We got a little broadening wedge / bullish flag on the daily chart here, so there's no reason to try to overpower that. Just let it develop, and then we'll trade with that.
I like it.
Anything else from you, Bill, on that stock before we go up to the next one?
No, let's go on to the next one.
So this one is actually going to be about a bundle of stocks, and I'm going to go ahead and share my screen for this because I want to ask you, both of you actually, first of all, if you ever heard of, and if so, what you think about this roundhillinvestments.com. I was actually on Twitter and I saw one of the influencers I follow were talking about this. I know a lot of people, might not know, they might want to expose themselves to all the smaller banks out there. So, they're trying to look for a way to get, invested into bigger banks. Well, this is apparently one of the ways to do it. One of their ETFs here is, I'm going to go ahead and scroll to the bottom right here, the Big Bank ETF, BIGB. Their holdings are, yeah, right. Bank of America, Citi, Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo. They have other ones as well. It looks, like you said, it looks trendy. It looks like it might be made for the degens type of thing where it might be something not to get into, if that makes sense. It might not be safe is I guess my biggest concern. They have the Metaverse one, ticker METV, ticker NERD, nerd for video games. Meme for social sentiment is one. Have you heard about this? And if so, is this legit or is this just another meme ETF, I guess?
I'll let Pookie take that one.
Yeah, so this kind of I don't want to invent a term here, but I like to refer to these as mom and pop ETFs. ETFs are very easy to set up if you have the capital and the proper licensure. And Roundhill Investments has, I think it's like $1 billion, right? Somewhere around there. So they could easily set up an ETF, but I don't think that's their I don't think this is their main focus. I feel like this is just a quick grab to get an audience. I don't feel like this is a stable investment opportunity for a lot of people. And I think that things like this are going to lull people into a false sense of security. And that's potentially very painful for a lot of Americans. I would really like to look more into the ETF and see their performance, because that chart right there doesn't look very good.
Yeah, I mean, this is their nerd ETF for the video games, where, as you can see, it started off there July 2019 at $14, went up as high as $38, and then ever since then it's been going downhill since then. Actually, I guess till here is where we've started to see a little bit of higher highs and higher lows, but still, I don't know if
they make their money from fees, not from their performance.
Right.
I'm a little sketched out personally.
It's different.
It doesn't pass the sniff test.
And how do you personally, when it comes to these types of, you see something on Twitter like this and it looks really cool, like, oh, wow, nerd, like, oh, wow, this banking ETF where it has the top 6, biggest banks, in the world. This looks awesome. How do you know when it's legit versus when it's not legit? Like something like this.
When they're more transparent. So if you look at that site, if you look at that ETF, they're not very transparent about the sizes of their holdings. They could just buy one share of each, right? And boom, they're shareholders.
Well, no, it doesn't, I believe it does.
Their weight, yeah.
Nintendo 15%, like Roblox 7%.
Yeah, I'm not feeling it.
I'm still not convinced. It's interesting.
I don't see any of those banks on that list.
No. So this is the nerd one. Let me pull up the bank one.
Yeah, let's take a look at that Big B. It was on that last drop down.
Yeah. Oh, it was. Here, I know it's right there as well. Explore the Big Bank ETF with Citibank, Wells Fargo, JP Morgan, and more. So this one has Goldman Sachs at 12%, Citigroup at 11%, JP Morgan, Morgan Stanley, Bank of America, Wells Fargo, all at 11%. Then it drops down drastically. Citigroup, Morgan Stanley again, JP Morgan, as well, under 2%.
Yeah, I don't know, man. It's pretty rough. I want to see performance. I want to see their intentions. I want to see their size of their customer base. I want to see the shareholder confidence. I want to see how well they've been doing at retaining people as clients. Right. Luring people in, getting them to invest in an ETF, that's easy. I want to see how many of those people are able to justify maintaining that profit.
No, it definitely looks like fees. Yeah, I mean, it looks like one of those like a Dogecoin version of ETFs, if that makes sense.
Yeah, I mean, ETFs and most people like ETFs because they can invest in hundreds of companies at once through one ticker. And some people look at it as maybe a safe place to put your money. But what's actually paying really well lately, and will probably continue to pay really well for the rest of the year, is just a straight up money market account. You guys, they're paying 4 to 5% annual, which gets compounded monthly. So you get monthly dividends that you can reinvest back into the money market account. And I got a bunch of money there right now, and I collect a check, dividends every month. I reinvest them. But depending on your portfolio size, we're talking several hundreds of dollars every month just coming in, you're not trading anything, so it'll just sit in the money market account, and it's very, very safe place to put your money if you are a little leery about some of these ETFs, especially if it's a newer ETF with not a lot of history.
A WordPress page
might not be the safest place right now. Just being honest, it might not be the safest place right now.
No.
It's like some brand new ETF with no history. Nothing really to compare there for performance. So if you just want something, so the way other end of the spectrum, then that ETF would just be a simple money market account. Your money's completely safe, paying about 4 to 5% annual compounded monthly. So
yeah. So quick little disclaimer here: it's not perfectly safe. There are still some risks with a money market account, but it's nowhere near as crazy as this, whatever conglomeration this is.
What do you personally think of some of the of their the weight that they have in some of these companies? Like, do you believe that the investors behind this are out of their mind? Like right now, for instance, for the video game one, do you believe that a smart investor would put Nintendo at top with 15% and have Roblox there with 7%? Like, do these look like good names to you, or does it look like someone who doesn't know what they're doing?
I'd have to look at the specific tickers and stuff, but I don't think Roblox should be worth 7% of the account or the portfolio. I mean, that already just is a red flag for me. EA I believe that belongs up there based on what I remember of it, but I'd have to look closely. Nintendo's a little high. Like, I mean, maybe 10%, maybe 8%, somewhere in that range. It just seems a little disproportionate. And then you've got, Bandai, Capcom, and Unity, which are, Unity's more growth oriented. I don't know. It just doesn't seem. I mean, it doesn't seem horrible, but it doesn't seem like it's very secure. But yeah, as Bull said, though, there's plenty of other more stable places to put your investment, and everybody should be as diversified as possible without over diversifying, of course, because that's a problem too. But just find something with a good interest rate, something that's going to have a good return on investment. It's not likely that you're going to lose money in a money market account. You still can if you get messed over by the interest rates, but it's not nearly as common as getting burned by an ETF.
The three main risks to money market accounts is going to be the interest rate, just like you say, Pookie.
Yeah,
liquidity. And then the other ones, there's a liquidity risk, and then of course credit risk. But overall, I think it's a safe place, and the reason why it's so popular right now is because the Feds have been increasing interest rates. So a lot of people get confused. They think, okay, Feds are increasing interest rates. They think all that has to do with is home mortgages, but they have to understand that includes the interest rates for automobile loans, credit cards. I mean, interest rates across the board go up. It's not just home mortgages. Okay. So just something to keep in mind.
I know that you dropped the alpha, I think it was like 2 streams ago, Swinging Bull, on the Vanguard accounts. I was asking about, banks going down, crypto at the time was going down, after FTX and all that. And, we were asking about some safer places. You mentioned Vanguard. When it comes to these money market accounts, Rogue Exotic was asking, where are you investing into a money market account?
I use Vanguard for my main one. Yep. And they're paying me 4.51%. Annual, and it obviously gets compounded monthly, so it's actually more than 4.51% because every month your balance gets bigger. So at the end of the year, it might be closer to 5% by the time the compounding takes effect, month over month. But I think Vanguard is probably one of the safer money market accounts, and that's where I got the bulk of my cash.
Yep, and specifically if you're looking to get in the door with Vanguard, you can actually just go to Vanguard.com. Or you can look at their different products. And this is the ETF one specifically. If you're ever curious about ETFs, don't be afraid to Google them or ask us. Every ETF kind of has its own specialty area. And with that, obviously, comes risk or a more conservative approach with a lower risk, lower profit. So obviously, you want to diversify. You want to have a good mix of both. But it really depends on you as an individual, what your pursuits are. Because not everybody's looking for retirement, not everybody's gambling, so just make sure that you take all that into consideration before you actually commit to these. But it's always good to do your research ahead of time and know what your options are, and that's why we're here. We're here to tell you about things like money market accounts, Vanguard ETFs, other investment types, so that you're not stuck in trading like SPY 0 days or buying bogus ETF stuff, or I don't know if they're bogus. I'm probably being a little too hard on them, but I don't know enough about them, and they're not transparent, so I don't trust them.
Right. No, I'm glad it was nice to be able to see the real time analysis of that ETF in particular from you, Pookie and Bull. Let's go to the last stock of the day that we're going to talk about, and this one is going to be FedEx, which is one of the stocks you, Pookie, was playing earlier today. So Red Door Wealth Management LLC sold some of the shares of FedEx, but that's not the real news. Like, the real news is that insiders are not only buying shares, but they're also not just insiders, analysts are. And I know this really doesn't matter in the the grand scheme of things when the analysts are saying all these different things. The analysts like to say a lot of things.
Oh yeah.
But all the analysts basically are on consensus of that they're raising the their valuation for FedEx. I believe they're trading at $226 per share. I can pull up your screen if you have
it's
it
up
on.
higher than that now.
There it is, 228 now. Yeah, it was a 226 of the writing of that blog that we go off of for the stream. But Bank of America analysts gave it a $305 valuation from a $233 original valuation. Citigroup went up from $250 to $275, and JP Morgan up their valuation from $199 to $233. So that's $233, $275, and a $305 valuation. These are all analysts giving drastically different numbers. What do you personally think about all these analysts, all these different numbers? Like, if you only listen to one of them, like, yeah, it's great, but then there's like 40 of them all saying different things. How do you kind of like take that noise out, when it comes to that?
So we actually talked about this morning on the stream, and when the analysts give price targets and stuff, it's not the result of them going out of their way to find these, doing the work, and then publishing some accurate representation of their work. It's a computer finds them. They apply an old DCF model from like 2010 that's outdated and it's not in touch with the current market. And then they kind of adjust it based on their judgment. And then they send it off to Reuters, AP, whoever, Benzinga. And then we get it put in front of our face, and then people react, right? And then we can only trade the speculation. FedEx, along with Amazon, has been below valuation for a long time, the actual valuation model. And if you're not sure how to do that, there's a lot of tutorials out on the internet, but I plan on also doing a PB Advanced course on that to kind of help narrow down how to look at a company and determine what it's actually worth versus the market value. And yeah, I mean, we got a huge sell-off down to 140 on this, the earnings there back in the summer of 2022 into the fall. And it's just recovered steadily since then. And, we've been trading it short-term all along the way. Because it has a lot of choppiness, a lot of volatility to it. And rather than buying and holding, which you certainly can, right now, I mean, it's kind of in that area where the valuation speculation is. I like to trade these shorter term. The long-term opportunities were down here in this area for this gap fill. And it's just, I believe it has potential to get up easily to 350 area, but we'll have to wait and see. That might take 10 years, right? We just don't know what's on the horizon for companies like FedEx, the sector itself, or the actual company specifically. So I do believe there's a lot of potential here, similar to Amazon. I think they both have a lot of growth potential as long as they can continue to be efficient. And in the meantime, until I see that confidence restored, I'm just going to keep day trading them like this. And you can see it's approaching the upper target here, 228.94, I believe we had. Because again, it was in a contention zone. It broke to the upside, and we just traded it and raised our stops, and that's where you make your short-term money until you can get to that long-term valuation level.
I know, Bull, you have we're at the top of the hour. You're doing your big move. Before we do head off for the day, I just want to draw everyone's attention to this website, it's metamattv.com/finance, where I put basically the YouTube video as well as a quick review or overview of what went down during these streams. You also can check out these blogs like the one that we did today, going over Boeing and AMC and Amazon, all the stuff that we went over. So definitely be sure to check that out. If you just are tuning in and maybe missed the stream, that would, that's just one way to catch up on all the different news and all the different technical analysis from Swinging Bull and Pookie's Revenge. But Bull, I know you got a big move to get to, right?
Yeah, moving into a new house, so people are waiting on me downstairs, and should be a fun weekend. Lots of pizza and beer and moving.
There we go. Yeah, I just got done with the Twitter Spaces right before this. We had a real estate agent or real estate investor on, just talking about all the different risks and possible rewards when it comes to investing in real estate and all that kind of fun stuff. And it's a hell of an industry, I'll tell you that. So good luck to you, boss. It's exciting. Like you said, a lot of beer and fun for you this weekend.
Oh, yeah, absolutely. I appreciate it, man. No, it was good chatting with both of you, and look forward to the next one.
Yeah. And as always, for all the members watching at home, we appreciate you all for tuning in. Thank you, Slim Pickens, Sailor Browd, and Nuclearite, Missy, and Katia, Mike, Gator, and Bebnet for staying till the end in the Discord. And we hope to see you next time. But until then, as always, we hope that you all make some bread.
Make some bread.